Good morning, Wall Street winners. It is Wednesday, April the 2nd. It is officially Liberation Day. We'll hear today from President Donald Trump. 4:05 in the Rose Garden from the White House. Expect a lengthy press conference with questions around the tariff implementation. And we'll get to that in a minute, but let's talk about where we are from a market perspective right now. So yesterday, the markets dove at open again and then rebounded with the Nasdaq up almost 1%, the S&P up 0.4, and the Dow just getting back to really where it closed the previous day after having been down significantly. We then flip over to where we are today in the futures market, and again, everything is down. We've got the Nasdaq off 1.3%, the S&P 500 off 1%, and we've got the Dow Jones down 0.83% or 349 points. So it's looking like a pretty bleak start to the day. There's a lot of fear and uncertainty and doubt around what is going to be said today. And there is a little bit of skepticism as well. And we'll get into that because I think that's going to be part of your trading strategy today. If you plan on trading, you can see here that in terms of data, that we have, US firms added 155,000 jobs based on an ADP data report. This seems much higher than anticipated and forecast. So this is a bit of an anomaly. Tells us that the job market is actually still strong. I'm not going to say very strong or super strong, but stronger than expected. And yet we have still the highest levels of fear and uncertainty from US consumers as well as US corporate. US corporations are, when they can, they're sitting on the sidelines around corporate investments. We also heard this morning from China or overnight from China. And China has now implemented a policy to restrict companies, you can see there in the exclusive top stories, restrict companies from investing in the US as these trade tensions rise. So that's going to have a potential impact. We don't know exactly what it is, where the fallout will be, but that is another data point to consider. Then we scroll down a little bit further, and this flips back to politics, so not really related to tariffs today, but thankfully, we have seen a judge, a Democrat-backed judge, defeating the Republican candidate in Wisconsin, despite Elon Musk's, I've read 85 million, numbers are exaggerated all the time, but a couple weeks ago was 25 million. But Elon Musk has effectively been trying to help buy this election, just as he assisted Donald Trump in helping him buy his election. So it is good to see that there is still a little bit of a difference between, or a layer of separation between the wealthy and elite class in the US and the political spectrum. I know that sounds like I'm uh, living in a cave from 100 years ago and have been um, convinced of something that's not true. But I mean, it's just been so blatant right now that it is nice to see that we can still have voting where uh, people can win despite the amount of money being given out for certain candidates. Anyway, that's a whole other issue to deal into. One of the things that President Trump is obviously looking to do is put in a huge tax reduction plan for reduction in personal and corporate income taxes. And in order to do that, he needs to generate additional income, and he's hoping to do that from tariffs. So let's turn our attention back to tariffs for a minute, because before we get into the markets and the individual stocks, I think talking about the tariff plan makes a lot of sense, because I think this should guide your strategy going forward. And what we've heard from a lot of different folks on in the investment business, whether it's from Wall Street or just from big banks, from hedge funds, from investment funds, from ETFs, a lot of folks are talking about this being the inevitable market of continuing uncertainty. And that is not meant to be a scare tactic, but it is meant to bring to your attention that some people in another camp are feeling that once the tariff announcement happens, then we'll get past this uncertainty and we'll be at a point where people's confidence will improve. And I'm not a believer in that camp at this point. I believe, as some of these other folks do, that what we're going to start to see happen is we'll start to see some details today, but then other countries who are now affected by these tariffs will potentially reciprocate. Others will negotiate behind the scenes, but discussions will happen. And as other incidents or other things occur from time to time, whether it's maybe a terrorist group in another nation, or Russia not coming to the table and negotiating with Ukraine, or the European Union doing something that upsets President Donald Trump, he'll use tariffs again in off the cuff comment as a threat to get the resolution that he's ultimately looking for. And that level of governance through uncertainty maps directly to his art of the deal playbook. So this is not a one time, or in this case, really 2 month period of uncertainty where we're going to achieve clarity. We're going to achieve a little bit of clarity, but it's just a negotiating tactic right now that will have a significant impact to the US consumer, the global consumer, and the global economy. But it is going to go on for uh, I hate to use the word unprecedented period of time, but for an unpredictable period of time until Donald Trump and his administration feel as though they've gotten what they were hoping to achieve through their renegotiation of these tariffs and a better balance in trade. So I think that's ultimately what we're in for today. So what does that mean in the markets? So my feeling is that, again, the markets are opening, likely to open lower today based on the futures. I think we may have some optimistic or optimism that pushes them up into the positive, but then during the day, towards the end of the day in particular, but then probably brings them back down to where they closed yesterday by the end of the day. Then we'll hear the tariff message after the markets close. And I think the futures will drop significantly. But again, tomorrow, they may actually come back and pop a little bit. So with uncertainty comes volatility. And I believe that's exactly what we're going to see. I think, though, this is the short-term perspective. In the long term, and long term being subjective, so let me define it. In the long term, being a quarterly approach. So for the next quarter, I think we're going to see obviously a mix of good and bad earnings depending on the sector. I think earnings from financials will start off strong, but then as we get into other sectors, they'll probably drop off. Certainly, travel and hospitality, I think, will plummet significantly based on consumer confidence. Retail will take a huge hit. And then in the following quarter, so 2 months out, we'll actually start to see in the economy the real impact of these tariffs. So we'll start to see increases almost immediately in car prices, depending on what happens at 4 p.m. today. And if anything is negotiated out of the tariffs to allow parts to travel tariff free across the borders for a period of time until manufacturing and a supply chain can get reestablished within the US exclusively. But we'll see prices of consumer products, particularly those from China, but other countries as well, increase. And that will put an increased burden and cost on the consumer and put less money in their pocket, which means less disposable income. And because they're concerned about the overall economy, they've already curbed back on spending. They'll continue to do that. And that will eventually propel the economy into a recession if we don't change the perception of the US consumer and increase their confidence. So I think we're going to see the markets correct another 10% before August. And then by that time, it may be enough to have convinced the administration to either change tact slightly, or they have maybe been able to conclude all of their behind the scenes closed door meetings and renegotiations. And that could be a turning point for the economy, allowing it to start to come back. And I think we'll finish the year above where we started. So I think it will be positive going forward. But I think the delay could actually even lead us into early fall and into the September timeframe. And then we'll see a bit of a bump forward and a pop as we close out the year. So that's my prediction at this point, and it is only a prediction. So use that for what it's worth for your investing thesis. But I would not be making buy the dip moves right now because I don't think you're anywhere near the bottom. But again, I think a great strategy these days is as the markets go down, buy some calls that are close to being in the money. And then when markets go up, sell the calls and buy some puts close to in the money for when the markets go back down. Because we're going to see a ton of up and down as we move forward. And that can be great for aggressive, active day people that trade on a daily basis or people that are active traders. Hey, if you're liking these videos, please hit the like and subscribe button. I put one out every day, and I'd love to have you as a subscriber or follower. And hopefully, I can help you better understand the market narrative, or at least just give you a different perspective than maybe the one that you're following or from other areas that you pull your data in from and digest information from. Okay, enough about the overall macro strategy. Let's jump into this and go into Yahoo Finance. Um, One sector that did very well yesterday at the end of the day was crude oil and the oil refining stocks. You can see as we go across the screen, you were close to $72. We're now down 45 cents in crude, down to 70.75. So I think we're going to have an off start, a red start to the day, but I think crude's going to rebound and probably end up around 71.50, maybe close to 72 today. Then we've got NASDAQ futures are getting beat up. So I've been looking at buying and have been buying recently some puts and calls on Meta because it moves at least $10 a day in that range. And those have been extremely profitable, but also buying puts and calls on the QQQ as it moves up and down. The VIX is up around 23 and a half. So we're getting into the risk territory. I would think by tomorrow morning, we could see the VIX hit 30 if the markets open in a downward trend and spiral. I'm staying completely away from health and retail right now because there's just way too much uncertainty there. If retail's down and the economy's falling or dropping, um, things are curtailing, then transport's going to be down. So I'm staying away from transport. Vista had a great day yesterday, but is basically losing everything that it gained yesterday in the pre-market. That's one I'm keeping an eye on. Con Ed, interesting, was off $5 in the pre-market earlier today, which was a bit of a surprise. That would have been a bit of a bargain buy if you could have got in $5 cheaper at the pre-market. I think those will pretty much hold their own through this, as utility stocks usually pay a good dividend and are pretty stable. Valero yesterday dropped down into like the 129 range, opening at around 131, and then closed the day close to 134. Huge swing in Valero. I bought into Valero in the 131 range in the early session and then watched it drop down to 125 and was losing money, but then it recovered nicely. I didn't get out close to 134. I definitely got out with a nice little profit. If it opens down again as it is today around the 131, I'm going to wait to see whether it gets back into the 129 range with crude being off. And if crude turns, I'm going to expect that Valero and some of the other names will turn as well. Then we get into technology, and everything is pretty much in the red in the pre-market this morning. But the names that I'm following, the QQQ off $5. So this is going to be down in the 460s. And this could be an interesting call option, longer term, so at least 2, maybe 4 weeks out. That would be an option there. You could also be looking, if it closed up at the end of the day, to buy a put, because I do think we're going to see a correction tomorrow morning, particularly in tech, if we hear anything negative around tariffs for semiconductors. And then Meta was up almost $10 yesterday. It looks like it's going to be back down in that 575, 576 range. I think it's an absolute steal at that price for an upward call option. Um, to see it come back up $10 by end of day or even tomorrow. Again, 2 to 4 week expiry would be what I'd be looking for on that one. And then the other one that I've been looking at recently for calls and puts is the SPX. So It closed up yesterday, but it was in the red at the start and then it back, and then it was up and in the red again in the afternoon, but then closed up. And I've been buying puts at the end of April for 5,700 and at the 5,700 level. And we'll see what happens here. I think obviously it's going to open down today. And there may be an opportunity to buy those back at a cheaper price than I got out of them at yesterday. So that's another option to take a look at. And then you've got your big banks. So JP Morgan off today. Morgan Stanley was downgraded today. And it is off, and then Goldman is off as well. And these have been other great ones to be playing puts and calls on the movement. I think, regardless of tariffs, I think the banks are going to come out pretty strong in the first quarter because of all this trading volatility. So I think they're going to weather this first part of the storm relatively well and could see quite a big bump. So I'm looking at a month out, at least past the 11th, 14th, 17th of April, when earnings get announced by then by most of these companies. Be looking at that to be my option end date and be looking for a call option there, especially on a big drop and buying them just in the money on the drop. So that's where we are today on April 2nd. Keep an eye out at the Rose Garden at 4:05 today. Um, it'll be an eye opener to hear what is revealed. And as long as you're aware of the fact that, there's going to be a tremendous amount of volatility within your portfolio if you're holding equities, then you'll be prepared for this. But do everything you can to kind of backstop that and avoid the risk. Good luck in your trades. And again, if you're liking the videos, please hit the like and subscribe.